SVB primarily provides financial services to technology and life science companies, which rely on the bank for a range of services. If SVB were to go bankrupt, its clients would need to find alternative sources of financing and banking services. This could be difficult, particularly for early-stage companies that may have limited access to capital. Companies that rely on SVB for funding could face a liquidity crisis, which could impact their ability to pay employees, suppliers, and other stakeholders. Impact on investors. Investors in SVB, such as shareholders and bondholders, would be impacted by the bank's bankruptcy. Shareholders would likely lose their investments, while bondholders could face losses or defaults on their bonds. The impact on investors could be particularly significant if SVB were to be a large bank with a significant amount of outstanding debt. Impact on employees. If SVB were to go bankrupt, its employees would likely lose their jobs. This could have significant implications for the local economy, particularly if SVB is a major employer in its region. Additionally, if SVB were to go bankrupt during a time of broader economic instability, it could be difficult for its employees to find new jobs. Impact on the broader financial system. SVB is a significant player in the technology and innovation ecosystem, and as such, has connections to other banks, financial institutions, and companies. If SVB were to go bankrupt, it could potentially trigger a broader financial crisis. Other banks and financial institutions that have exposure to SVB could face losses or defaults on their own loans and investments, which could exacerbate the impact of SVB's bankruptcy. Additionally, if SVB were to go bankrupt during a time of broader economic instability, it could amplify the impact of that instability on the financial system as a whole. A bankruptcy of Silicon Valley Bank, SVB, could potentially trigger a broader financial crisis, particularly if it were to occur during a time of broader economic instability. If SVB were to go bankrupt, it could have ripple effects throughout the financial system, impacting other banks, financial institutions, and companies that have exposure to SVB. Here are some potential ways in which a bankruptcy of SVB could impact the broader financial system. Contagion effect. If SVB were to go bankrupt, other banks and financial institutions that have exposure to SVB could face losses or defaults on their own loans and investments. This could create a contagion effect, whereby the failure of one bank triggers a chain reaction of failures throughout the financial system. Liquidity crunch. A bankruptcy of SVB could potentially trigger a liquidity crunch, particularly if it were to occur during a time of broader economic instability. Banks and other financial institutions that rely on short-term funding could face difficulty in accessing funding, which could impact their ability to lend and provide liquidity to the broader financial system. Regulatory response. The bankruptcy of SVB could prompt a regulatory response, as regulators may seek to shore up the financial system and prevent further failures. This could include measures such as increased capital requirements, tighter lending standards, and increased oversight of the banking system. However, it's worth noting that a bankruptcy of a significant player in the technology and innovation ecosystem such as SVB could potentially have significant implications for the financial system as a whole.